Good morning or afternoon or evening, wherever you are. Thank you to the Center for Financial Inclusion for inviting me to participate in this wonderful event. It is always a pleasure to be in a room with individuals who share the same passion that I do for a more inclusive and equitable financial system. My name is Luz Urrutia, and I am the CEO of Accion Opportunity Fund, known as AOF. AOF has been in business for 28 years, and we are a community development financial institution known as CDFI, headquartered in San Jose, California, and serving customers in 45 states across the United States. CDFIs are really the front line of disaster recovery in all forms. We help the economy by deploying capital and other services for underserved communities during the Great Recession, during hurricanes, wildfires, floods, and obviously more recently during the COVID-19 pandemic. AOF today provides entrepreneurs that have been left behind by the mainstream financial system with affordable capital, business advising, and support networks to help them build thriving and successful businesses, support jobs, invest in their local communities, and build a more inclusive financial system. Nearly 90% of the businesses that we work with are owned by people of color, women, and or low to moderate income individuals. You know, in the US, we are experiencing an entrepreneurship renaissance. And as a result, we are committed to investing in research and development to better understand the entrepreneurs that are building businesses. What are their needs? How can we serve them better with digital tools and solutions? And how can we prudently expand our credit offerings to reach more underinvested entrepreneurs across the country so that we can help revitalize the economy and rebuild our businesses? I will share a personal story. I know what it means to be rejected by the US banking system. As a Venezuelan immigrant, I applied for a $500 credit card and was turned down by the same bank where I was working. To them, my immigrant status and my lack of credit history at the time meant that I was invisible and unbankable. And that experience inspired me to really spark change in the US banking system. 18 years later, driven by the same experience, I founded El Banco de Nuestra Comunidad, a community bank serving Latino consumers and small businesses in the state of Georgia. For those of you that are not from the US, Georgia is one of the largest states in the Southeast United States. Making my pitch to investors to raise capital to form the bank, I again heard, sorry, no, at every turn, until I did the exact same pitch with a male board member by my side. Then the funding started to flow in. Those experiences happened over 20 years ago, and sadly, not much has changed in the United States. The last decades have been ones of increasing wealth inequality and decreasing economic mobility, especially for communities of color. And despite studies showing diversity leads to economic growth, racial inequities hinder our progress and prosperity. According to PolicyLink, the annual GDP in the United States could be $2.1 trillion higher if racial income disparities were eliminated. By encouraging and enabling small business ownership by people of color, we can unleash the country's full potential. I'm going to share a story about a client who understands what I'm talking about firsthand. Christian and Alexandra Catalan own a catering company called Morsel and Crumbs in Houston, Texas. They were part of a new wave of small businesses led by women, immigrants, and people of color that have launched in recent years. They started small catering church events, but became really popular very quickly. They expanded their business to offer healthy, pre-made meal prep kits to sell more than 30 flavors of popcorn. Business was booming, but they needed more space to accommodate their growing customer base, and they would need a loan to purchase a food trailer, and that's when they hit a roadblock. They were rejected multiple times by the traditional banks. And their story is one that unfortunately we hear all the time. Small business ownership is a proven path to building household wealth and financial security, but systemic inequities shut out too many people. It is a vicious financial cycle of underfinancing. There are fewer opportunities to receive loans, which in turn result in people not having credit or having thin files. And so these individuals have to resort to predatory lenders, to very high cost lenders that charge exorbitant rates and wreak havoc for thousands of small businesses in our main streets. Fortunately, we helped the Catalans through a lending partnership we joined called the Southern Opportunity and Resilience Fund. They say that the loans changed everything. They purchased a food trailer that helped them take their business to the next level. It offers space for cooking, flexibility for catering, and the chance to open up shop at a food trailer complex. With a trailer, the Catalans can save more than $1,000 a month on commercial kitchen space, while also having the option to go mobile. These stories can be repeated 1,000 times. You know, substantial work needs to be done to make the next decade one of equity, inclusion, and shared prosperity. To fight for economic, racial, and gender justice within the United States financial system, AOF advocates for transparent and affordable products and services, innovative partnerships, and fair policies that build a more inclusive financial system for entrepreneurs who face systemic barriers, are overlooked, underfunded, and purely excluded from the system. I'm going to start talking a little bit about products. It is more important than ever to ensure that small business owners, particularly those left behind by traditional financial institutions, have the capital and resources that they need to survive and thrive. This means getting the resources they need in the right amount, the right terms, and at the right time. We strongly believe that to serve the needs of the underinvested small businesses at scale, primarily those owned by people of color, women, and those of low to moderate income, we have to meet these business owners where they are. That means a combination of tech and touch, technology and touch. Many businesses are ready to embark on a digital journey for borrowing money. Others feel that there are parts of applying for a loan where they need someone to speak with, to answer their questions in their own language, and when they're available and not running their business. This combination of tech and touch and the flexibility that it offers are critical to serve these small business owners at scale, doing effectively and efficiently. We also know that financing alone may not fix the problem. Small business owners also need coaching, business advising, and support networks to thrive. There is a need to provide more advisory services to help small businesses navigate how to establish and manage their business, how to build credit, apply for loans, hire staff, and many more things. These offerings delivered in a digital manner can truly help small businesses access those resources anytime. At AOF, we are working to strengthen the customer experience for small business owners online so that they can easily find the right support and the right resources that they depend on based on their needs, their size, and the stage of the business. We also believe that partnerships are crucial. The lending gap in the U.S. pre-COVID for loans under $100,000 was estimated at $87 billion. Post-COVID, the estimates are closer to $130 billion. Not one single institution or multiple institutions working independently can meet the significant gap. The only way to tackle this problem, which is substantial, of access to responsible capital is through partnerships that take advantage of working together and value each of the organization's expertise, their resources, their market know-how, their digital capabilities, among other things. But what COVID did for this crisis, which is very positive, it's that it promoted and allowed for the development of partnerships and innovative programs, digital transformation, and much stronger collaborations between community development financial institutions to help fill the capital void for small businesses that were struggling the most. You know, in total, there were 4 funds that launched in the past 2 years in 18 states, raising over $400 million in private sector capital. We've disbursed already over $330 million, nearly 5,000 small businesses through a network of 25 CDFIs. And these funds are enabled by government funding, which has allowed to unlock private sector capital. 66% of those loans have gone to very small businesses, and over 98% of the fund meets what's known as the CD, the socially, economically, and disadvantaged businesses, and going to, minority-owned businesses, businesses owned by people of color and women. We believe that these funds have the capacity to really transform the landscape for small business lending in the United States, bringing together, again, government funding that unlocks private sector capital, banks, corporations, foundations, philanthropists to help support the work that CDFIs do and help CDFIs operate more effectively and more efficiently so that we can scale our lending. 2021, we also launched a partnership, thank you to Accion, for an introduction with American Express. It's a new program to propel growth and offer much needed capital and expert business advising to historically underfunded small business owners that are in a strong position to rebuild and grow and don't have the resources to do it. American Express committed $40 million, which is the biggest investment our organization has ever received, and all that capital is being deployed into communities. So partnerships are critical. Another integral partnership that we are extremely excited about is with the Center for Financial Inclusion. We joined forces on a research collaboration this year that really aims to bridge our common organizational objectives and generate insights on inclusive finance and entrepreneurship in the U.S. and across global markets. We will leverage our expertise in providing capital and coaching to entrepreneurs in the U.S. and CFI's global research and advocacy capabilities to learn and identify common themes across markets and successful approaches to creating more inclusive economies. Last but not least, policy. There are a number of important steps that policymakers and regulators can take to facilitate access to responsible and affordable capital for small businesses, especially those that are chronically underinvested. Lending transparency. First, we need to ensure that our lending institutions are transparent, equitable, and accountable, and expose the gaps in the system that don't allow for overlooked entrepreneurs to get the access to the capital and the resources that they need. It's critical for our Congress to follow in the footsteps of what the state of California and New York did and pass what's known as the Federal Truth in Lending, which require lenders to disclose the rates, the interest rate, the fees, the annual percentage rates, and the terms of the loans they're making. If a lender can't make a profit without deceiving the customers or charging rates that are usurious, then they have no place funding the small businesses that make our communities and make our country thrive. In addition to transparency, we need accountability within the financial industry so that we can better capture the lending data and understand what lending is being done to whom and by whom. Today, in the U.S., lenders are not required to report how much of their lending goes to minority-owned businesses or women-owned businesses. I believe that sunshine is the best of disinfectants. If we bring clarity where the capital is going, then we will be able to solve the gap of where the capital is not reaching. Also, provide greater funding for community development financial institutions to increase lending activity is tantamount to providing support to underinvested entrepreneurs across the country and expanding financial inclusion. In addition to loan capital, CDFIs need investment in technology to transform their digital products, to better underwrite, fund, serve customers. And we also need to invest more in data analytics so we can get better insights into the communities and the customers that we're serving so that we can provide better solutions for their needs. In closing, as we transition to a life beyond COVID and all the necessary crisis level response from the government, the questions for CDFIs like Accion Opportunity Fund are, how can we translate the awareness, the energy, and the resources of the past 2 years into long-term systemic and sustainable growth? How can we invest in CDFIs and other community lenders in non-crisis times so that they are equipped for the next crisis? And our answer is really simple. We need to collaborate. We need to design industry-wide market-based, bipartisan solutions that use the vast resources of the federal government to unlock capital from the private sector so that we can scale our impact with integrity and invest in CDFIs to enable them to continue investing in our nation's small businesses, both in the good times and the bad times. So thank you to CFI for this opportunity and to the audience for joining us. See you all soon.